April 2nd, 2025, is a historic date that could reshape the global energy market for decades. On this day, Canada's energy future was forever changed with the official launch of the Trans Mountain Pipeline Expansion, TMX. With a staggering $34 billion price tag and nearly a decade of delays, this expansion finally opens the door to new international markets for Canada's oil. The energy world is watching closely as TMX begins pumping 890,000 barrels of crude daily, a critical shift for Canada, which has struggled for years with limited market access. But this major change also brings new geopolitical tensions and challenges, especially as President Trump's tariffs threaten Canada's trade relationships. At the heart of this shift is the $34 billion Trans Mountain Expansion. But just as Canada's oil found its new route to the Pacific, a major threat emerged from south of the border. Former President Donald Trump, eyeing a political comeback, introduced a potential 10% tariff on Canadian oil. This move sent shockwaves through Canada's oil industry, which could face losses upwards of $10 billion annually if the tariffs take effect. Canada's oil, which was once tied to U.S. interests, now flows toward China and beyond. This deal is a sign of things to come. China's demand for heavy crude, particularly from Canada's oil sands, is skyrocketing. According to Reuters, Rangsheng is also eyeing other major players like Cenovus Energy and Canadian Natural Resources to expand its foothold in the Canadian energy sector. For Canada, this is a game changer. The Trans Mountain Expansion is projected to add $20 billion to the Canadian economy annually, but there's a catch. Environmental groups still warn about the risks of an oil spill on Canada's Pacific coast. The Canadian government has responded with a $1.5 billion spill response fund, but the debate is far from over. Meanwhile, Canadian Prime Minister Justin Trudeau's government is pushing back against Trump's tariffs. In 2023, Canada's oil exports to the U.S. were worth over $200 billion. But if these tariffs stick, Canadian producers could be squeezed, leading to a possible rise in fuel prices for American consumers. The Trans Mountain Expansion and Canada's growing energy ties with China are reshaping the global energy market. As Asia's demand for oil increases, Canada is positioning itself as a key player. This is no longer just about U.S. ties, it's about securing long-term contracts with global players, especially in China. And it's not just oil. Natural gas is also in the spotlight. Canada's $40 billion LNG Canada project in British Columbia is set to ship 14 million tons of liquefied natural gas annually starting in 2025, targeting Japan and China. This diversification away from U.S. exports could completely alter the North American energy landscape. As Canada diversifies its energy exports, it's positioning itself as a versatile energy titan. Whether it's oil, natural gas, or hydroelectric power, Canada is aiming to become a key supplier to Asia's booming economies. With TMX and LNG Canada leading the charge, Canada is shifting its energy focus away from the US, and the world is watching. But the questions remain. Can Canada seize this moment to become a true global energy leader? Will China's growing influence in Canada's energy sector eclipse the US once and for all? And will President Trump's tariffs become the spark that accelerates this shift, or a wrench in the works? The energy dynamics in North America and beyond are changing, and Canada is at the center of it all. If you're keeping track of this evolving geopolitical game, make sure to subscribe, like, and hit the bell icon to stay updated.